Hey guys, didn't see you there. I'm just over here hanging out, answering a couple emails. I'm here with Sterling SBA today. You know, I'm not Sterling, but I got here a little early, so I figured I'd handle the intro. Today, Sterling is going to be at Tom's Tiki Hut, hanging out with the president of BayFirst National Bank, Tom Zernick.
Bless them darling, more plays off of homegrown. Good cause coming, post haste, no more prolong. Jeez, I'm tryna get paid at the utmost. See it up close, don't freeze, I'm at the more. Jeez, tryna get paid, you know it's all still part of the game. They running 5 drills, I'm off for the chain, and I'm hot still. Looking like Scorpion, get over here. Been some people trying to relate, ain't close to here. Think it ain't a sacred place, you done misinterpret relationships, just ain't been worth it. Fool if you think, but I don't post, ain't working. Never too close, I know no things certain. I walk in purpose, float on surface, fly in person.
Tom, thank you so much for having us out here today.
Hey, my pleasure, Sterling. Great to have you back at the Tiki Hut.
Absolutely. This is lovely St. Petersburg, Florida, and we are at your Tiki Hut. Would you mind if I order a drink?
Oh, please do. We are at the Tiki Hut bar.
Bartender!
Coming right up.
Tito's and soda with lime, please.
Absolutely. Shaking?
Always.
Right.
Thank you, bartender Chris.
Thank you, sir. Appreciate that.
You're welcome. Enjoy.
You look super familiar.
Loan committee.
So, Tom, obviously, you know, you've been in banking for quite some time. You know, you've started a lot of careers. You've enhanced and furthered a lot of careers. But I want to hear about how your career in particular started.
Yeah, sure. Well, I was a junior at Notre Dame, 1983.
Okay.
My family moved from outside of Chicago to Jackson, Michigan, and my father said, Tom, you're a business major, go interview at the local Jackson bank. So I did that and got a job offer as an intern and started as a drive-up window teller.
Really?
And I had a microphone, and I was known as the teller that never wore socks. And caused a lot of problems with my branch manager. In fact, one day she said, the next time you come in without your socks, I'm sending you home.
Really?
So I said, well, listen, this is a summer job. I'm just going to test the waters here. I came in without my socks, and she said, Tom, I told you yesterday you're going home, so go home. You're not getting paid today.
Wow.
And thank God the vault teller came running out and said, Ruth, you can't send him home. We don't have enough coverage to keep the branch open.
Oh
So she came to me and said, you know, you're going to work today, but for your lunch hour, you're going to go pull weeds along the fence line.
Oh my God.
And it was that point in time when I said, I got to study a lot harder my senior year, and because banking is boring, and I got to do something different than banking.
Wow. So you were initially trying to actually get out of banking.
Yeah, I was, but you know, I graduated, and the president of the bank reached out to me and said, hey, listen, you know, we're creating an opportunity in retail banking, and we'd like you to consider it. And I did that.
That's very interesting. So the president of your bank reached out to you directly
Yep.
and said, hey, we want you to join the retail team.
Yeah.
Now you're a bank president. So how do you go all the way from the retail team to being a bank president?
Yeah, you know, the day before I started, my first day full-time after I graduated from college, I asked my dad, who was a very successful engineer, I said, Dad, what's the secret sauce? You know, what got you to where you're at? And he said, you know, Tom, smile a lot, don't complain, and make your boss look good. And I always remembered those comments. So I always had a very positive attitude. I had a can-do attitude. I had fire in my belly. I had a sense of urgency to go above and beyond and show people what I could do.
What do you think it was inside of you that gave you that motivation?
Well, you know, I always had to study really hard in school to get A's and B's. I wasn't a rocket scientist. I wasn't a Rhodes Scholar. I had to work hard for what I had.
Sure.
And I came from a medium income family who worked really hard. And I remember telling my mom, if I stay in banking, I want to be the president, because that's a cool job.
Right.
And I set my goal early on, back in 1984.
So you knew you wanted to be a bank president?
I did.
Wow.
Once I got into the banking scene, I said, I want to be a leader.
Yeah.
I want to manage a team. I want to build something. And early on, I said, I want to be the individual at the top.
So, obviously, you are the bank president now of BayFirst National Bank, the same bank that obviously I work for as well. You got that opportunity. It's probably been about 8-9 months now that you've been in the role.
Right.
How did it feel when they came to you and said, "Hey, Tom, we want you to be the president of this bank"?
Yeah, it was a humbling moment when our CEO Tony Leo came to me and said, we'd like you to be our guy. The board's very comfortable with what you've done in the SBA world.
Sure.
And we've seen what you've built, and it's not necessarily about me. It's about the team I built.
Right.
It's about taking people from great employees to rock stars.
Right.
And I was able to do that in a lot of the folks in the credit bench team. And I was able to get along with my other peers from the other departments of the bank. And it was really through PPP that I had a chance to really pick up my game at the bank and work really hand in hand with our CEO to get us through PPP. And from there, it really launched my opportunity and exposure
Sure.
with the other business lines and with the board of directors.
So, Tom, obviously, the economy has been changing dramatically over the last 18 to 24 months. We've seen some banks that have failed in that time as well. Talk to me a little bit about the banking industry and your outlook and where you see it in maybe the next 6 years or 6 months to a year and then beyond that.
Yeah, sure. There's one thing that I've learned coming out of PPP. Customers, both consumers and businesses, learned to do banking on their cell because bank branches were closed. They had to look at alternate means of transacting business with banks. So I firmly believe that there'll be a digital transformation. Just like we just launched our digital account opening last week at BayFirst, I think other banks will be jumping into that bandwagon, giving clients an opportunity to bank from their cell phone.
Sure.
And I can see it transitioning into the business environment as well. The rest of the banking, bank stocks were impacted. Just like through COVID, bank stocks were impacted. Banks have been impacted because of the collapse of Silicon Valley and Signature Bank. So as we work our way back, I firmly believe as we work through the recession pressure and recession fears, 6 months to a year from now, we could be back into an environment where bank stocks right size and we start to see some merger acquisition opportunities and we see a little bit more activity in those veins.
Sure.
And I hope at BayFirst we have an opportunity to be in that space.
Okay, well that's very interesting that you said that because the next thing I was going to ask you about is consolidation, right? Because with banks of our size, obviously, it seems like there's a lot of mergers and acquisitions that take place naturally. Do you see consolidation continuing to be what happens to banks of our size?
I do, and right now there hasn't been a lot of merger and acquisition activity since the beginning of this year. It's been a very calm environment. I truly believe, though, the larger banks are going to come look at community banks like us that can't go anywhere, that don't have an attractive business model, they're not in an attractive growth market, they don't have the right management team. Those banks may get gobbled up by the larger financial institutions. But where we have a difference, where we have a competitive advantage is banks like us that are growing. Because when I joined BayFirst, we were a $100 million bank with 1.5 branches.
Wow.
That was January 16. Today we're $1 billion.
Right.
And 10 banking centers. So banks like us that can grow organically, that can grow and have distinct platforms like our SBA credit bench platform to offer to the clients, we have something that a lot of other sleepy community banks simply don't have. We have the ability to go from $1 billion to $5 billion. So the community banks that can control their growth, and most importantly, You stay independent. You earn your right to independence through profitability. So as long as we can stay profitable, we will be able to stay independent and control our own destiny.
So, Tom, I want you to think back, because obviously, how long has your banking career been now?
It's been 40 years.
40 years?
I started as an intern 1983.
Wow. Okay. And when did you get your first sales role?
I got my first sales role in 1986.
Okay.
I started full-time in 1984 with the bank on the retail as a retail branch analyst. I moved into the credit department. I became an underwriter, and then I transitioned into becoming our bank's first, what they called, personal banker.
Okay.
And I had never really done any outside sales. So the president of the bank came to me and said, listen, we're going to create this personal banking position, and you're going to bring in checking accounts, savings accounts, and loans, and you're going to call on businesses, and you're going to call on individuals. And I said to him, I said, well, John, I have no idea. Do I just take the yellow pages? And he came out with the Country Club of Jackson membership directory and said, Tom, here's your calling list. These folks are all Country Club members. Many of them own their own businesses. They're successful doctors, manufacturers, etc. He said, start calling on them.
Oh, wow.
And I did just that. I started at the A's, and from there, I realized I have an art of being able to connect with people. And it was interesting because back then, in 1986, I really didn't know the difference between a checking and savings, let alone a SEP IRA or a pension plan. I didn't know a lot about commercial lending, but I found out I didn't need to. I just needed to know the experts that could do it for me. So,
sure. Well, you understood the human side of things.
I did.
Right.
I did.
And that takes you a long way, because I think people sometimes in banking get caught up in the numbers.
Right.
Because the numbers help you make decisions, but at the end of the day, the people who make the decisions are all human beings.
Right.
Right. So it's understanding that human aspect. So talk to me about what it was like doing business back then. Because I mean, obviously, nowadays everything's on Excel, everything's on a computer. It's just a different world that we're living in now with the technology. I mean, back then, was it on the napkin? How'd you get it done?
Yeah, it was amazingly old school. We didn't have cell phones at that time. We really, literally, I would on a Friday afternoon. When I was a junior loan officer, really starting to do a lot of calling. I would go out with one of my senior lenders. We would get into our car, and we would drive into the industrial parks, and we would write down the list of the company names that had a lot of cars in their parking lot.
Oh, wow.
Because we figured those were people with a lot of employees. Yeah. They must be doing well.
Yeah, or a lot of customers.
So I would write down the names, and then I would go and I would pull an old RMA, or like a Dun & Bradstreet report on that company. I would find out who their CFO or president was, and then I would call them and I would say, hey, Bob, I was in your commercial industrial park last week. You have a beautiful building. Can I come out and share with you find out a little bit about your company, see if I can save you some money on your interest rate on your loans, or make you some more money on the interest rate on your deposits, and give you some options.
Right. And
9 out of 10 times, business owners would take the time to listen to options.
Right.
Most people don't say no to saving money or making money.
Yeah.
So that was kind of my forte. It was old school. That's how we did lead generation. We didn't have loan brokers. We didn't have business brokers. Everything was what you created.
Right. That's interesting, because I think cold calling is probably a lost art these days. I mean, do you think that still has value in 2023?
It can, particularly if you have a banking center within a 3 to 5 mile radius of these businesses. You can say, hey, listen, we're a local bank. We're right in your backyard. Give us a chance.
Right.
It takes time, though, because a lot of companies won't move with the first call. It takes repetition.
It's a longer sales process.
It is, and not everyone would immediately say, yes, here's my financials, give me a price I'm buying my building.
Right.
So that was a one-off opportunity, but it was all about building building relationships and becoming known as the banker. So when you walk into a restaurant, people know
You're Tom Zernick, the
you're
banker.
Tom and you're with X Bank and you're the guy.
Right.
And that's really what I always strive to become in the markets I served.
So obviously we talked a little bit about how you got started. We talked a little bit about the way that you guys used to do deals in the past. I'm interested to hear, tell me some stories from your time as a producer.
Sure. Well, the first time I got into production, I was a credit analyst. I was a credit underwriter, and I supported a team of commercial lenders. And we had loan committee every Friday. And I was a young analyst. I was training with my credit manager at the time. But I was on the job for a week, and he didn't have a chance to teach me the data processing part of the preparation of the credit memo. And back then we used Lotus 123 and we used an Apple software that was just archaic. Well, on Thursday night, I had a loan officer bring me a credit file and ask me, can you please prepare the credit memo? And this has to go to committee tomorrow morning. So this was probably 6 o'clock at night. And I said to Gary, the loan officer, I said, I just want you to know I don't know how to do the data processing, but I'll figure something out. So I knew how to do the spreads.
Yeah.
So I got the spreads done, and I actually hand wrote the credit memo. So I
Wrote it by hand.
I wrote it by hand.
Wow.
And I came into work the next morning, and back then we didn't have copy machines that would sort and collate. So, there were probably 8 to 10 people in loan committee, so I had to make individual copies and run around the boardroom to put the packet together.
Wow.
And the loan was the first one on committee, and the president of the bank that hired me looks at the credit memo, and it's in my handwriting. And he looks at me and says, Tom, do you know that we have an Apple computer that can type all this for you? I said, well, John, I know that, but I don't know how to use it. And my credit manager had gone on vacation. So anyway, the loan got approved, and
Wow.
they ended up being...
And they kept that memo?
They kept that memo.
They signed it?
In the archive somewhere.
Wow.
But that was my first experience in the underwriting side. And really, later on in my career, I ultimately became a commercial loan officer.
Sure. Did you go into SBA immediately?
No, I was in conventional lending, and the president of the bank came to me and said, hey, Tom, I want to get into SBA lending. I want to become the largest SBA lender in Michigan. And once again, I said to John, I don't know anything about the Small Business Administration, but I'll learn. And I ended up looking at the ranking report in Michigan, and I identified the number one lender in Michigan. And I called the bank and I said, can you put me in touch with the head of SBA? And they put me in touch with the gentleman, and I called him. I said, hey, listen, I'm not in your market, but I want to start doing SBA. Can you help me get there? Mm-hmm. And he was kind enough to allow myself to go visit his bank, and he basically spilled his guts on how he does SBA. And I went back, I wrote a SBA product directory for our company, and actually did the first SBA loan for the bank. It was a customer of mine who owned a Dunkin' Donut.
Yeah.
And he wanted to buy a closed restaurant and turn it into a franchise.
Okay.
It was a Hacienda Mexican restaurant. So it was construction,
Yep.
startup, SBA. So I pulled out the standard operating procedure of the SBA, and in it was a checklist of things you had to put into your loan. Mm-hmm. And back then, we didn't have the ability to email. There was no computers.
There was no
to do
email
that.
then?
There was no email back
Wow.
then. So I simply mailed in a FedEx box the entire SBA loan application packet.
Wow.
It was probably an inch thick. I sent it to a loan officer in Detroit because back then, SBA approved all the loans in your local SBA district office.
Okay.
So we were not a preferred lender. We didn't have our own approval authority. We would approve it at our loan committee, and then we would send it to the SBA, and we would wait for their loan officer to review it and let you know if they're going to do the loan or not. In this case, I sent the loan to Detroit. I kept waiting and waiting. I would call, no response, and my client was getting frustrated because he had a purchase agreement to buy this closed restaurant.
Sure.
Well, 4 months later, I get a FedEx box in the mail. I'm like, oh my gosh, I got like the whole closing package and everything. I open it up and it's my original kit with a note on it that says, I'll review this loan application as soon as you have a complete file. Wow. So I first of all, I was so embarrassed because I had to call my client and tell them, listen, I don't have everything. I don't have all my ducks in line. And I called the loan officer and I said, couldn't you have called me? And he said, that's not how we work. We only work on a complete package. So I got the rest of the material. It ultimately got approved. It got closed.
So how long did it take you from start to finish on that one?
It was probably 8 months to get that loan closed. And I remember I went into my president's office and I said, John, I'm never doing another SBA loan again. I will never go through this again. It was a terrible client experience. It was a terrible experience for me.
Yep.
I can't do this. I just want to do conventional loans.
Right.
Well, probably $3 billion later in SBA loans that I've managed and produced,
Yep.
I'm still in it. And as you can see from this tiki hut, SBA has been good to me.
So obviously the rate environment has changed dramatically over the last 18 months, 24 months especially. I think at the beginning of 2022, max pricing on SBA was about 6%. Now max pricing on SBA 7A is 11.5%. So it's almost doubled. How are you seeing this environment for borrowers? How are they able to sustain and make their loan payment?
Yeah, I would tell you that, over my 40 years, I have seen rates climb to the 12, 13%. I've seen it back to where you mentioned at 6%. I think what businesses have to realize is the cost of capital, if it can materially change your business operation, is worth that interest rate. For example, let's take a small business that needs $125,000 because they want to hire some folks, they want to do some additional marketing, search engine optimization marketing, they want to buy some Google AdWords, maybe they want to buy some technology. For those small businesses that need that $125,000, looking at a prime rate plus a spread of 275, 375, it makes sense for them because the alternatives are you go to a hard money lender, you factor your receivables, you go to other online marketplace lenders that do cash advances and you pay the loan back every week and the interest rate may be 30% to 60%.
Right.
With huge fees. So that's nonsense. So I would tell small businesses, if you have a working capital need that you can take money, even at 11.5%, and convert it to productive revenue generation, you should look into that. Even at where prime's at 8.5 today, there's still ways to use money productively to take your business from $400,000 in revenue to $700,000 in revenue. So I would say there's good debt still out there. On the larger loans, the business acquisitions, buying a building, it is definitely challenging today. Folks today are looking at rates going, buying this business at a 6% interest rate, it cash flows 1.8 times.
Yep.
Buying this business at 11.5% interest rate, it's at 1.1. It doesn't make sense.
Right.
So we are definitely seeing headwinds right now, but I'm hoping that the economy begins to slow down enough to get the Fed to pause on rate hikes, and I'm hoping a year from now we start to see rates come back down. So I would encourage businesses to hang in there, look at what is this loan going to do for me, because they may find out even at 11.5%. Refinancing debt, buying this business, and adding scale into their revenues might make sense. So I would say talk to your banker, take a look at what does this mean to my bottom line, and see if it makes sense to still buy your building, to still buy that business, to do that debt refinance.
And no, that's a great point that you made there. So I'm curious, do you think that you'll start to see some sellers now who are going to maybe back off of the numbers that they want, or do you think you're going to start seeing some restructuring to kind of adjust to the market and where we are now?
Yeah, I think sellers have to contribute in today's environment, whether they carry a note or carry a bigger note to get the bank debt down to where it makes sense, or they may have to adjust purchase prices. Because again, a good buyer who's prudent, that studies the numbers, is going to be sensitive to the cash flow.
Right.
So I think it takes a seller that wants to move their business today. They have to be willing to carry some paper on the loan. They need to become part of the lending pool and take some risk.
Sure.
To get the bank loan down to a point where cash flow is comfortable enough for that small business.
Makes sense.
But again, there's so many baby boomers today that want to sell their business. So that pool of businesses that want to sell is out there.
Right.
And we are so upside down on supply and demand. We have a huge supply of businesses for sale, and we don't have a lot of qualified buyers coming into that pool because unfortunately, a lot of the kids today, they don't want to buy mom and dad's business. They don't want to take it over because they don't want to work as hard as mom and dad.
Yeah. They saw how hard mom and dad had to work.
Yeah.
They say that's not for me.
That's right.
All right, so here is a new segment that we are going to do today, and it's going to be called Truth or Drink. And so I'm going to ask Tom some questions, and he's going to have the option to either answer these questions or he can take a sip of his drink if he would prefer not to answer these questions.
All right, let's start.
Okay, so first off, who is your favorite Bay Boy?
Wow.
And just so you know, the Bay Boys would be myself, Chris Hackney, and Austin Porter. So you have to make a decision as to who's your favorite or drink.
I would tell you right now, Chris Hackney is my favorite Bay Godfather. You're my favorite Papa guy.
Okay.
And Austin is the boy. He's my favorite Bay boy. So I love all three, and glad to be partnering with you all.
Absolutely, no, we're glad to be here as well. Okay. Would you rather do an unsecured loan or a construction loan?
I would rather do an unsecured loan.
Why?
Construction lending is a brain drain.
Yeah.
Oftentimes we have borrowers that work with contractors that that have no sense of urgency. Plans change, changes get made to the projects. There's cost overruns. The borrower doesn't have the ability to pay the cost overruns, so they look at us and say, "Can you lend me more money?" Which we don't really want to do. Construction lending, unless the project's in my backyard and I can see it, and I have a great buyer and a great borrower rather, and a great contractor, I'd rather do an unsecured loan and take the risk it doesn't pay me.
All right, well, we're going to remember that next time we're in loan committee.
All right.
Next time an airball shows up, I'm going to remember. At least it's not construction, Tom.
Yeah.
All right, so what's the least fun part of your job as a bank president?
I would tell you the most challenging is being able to execute on all of our strategic initiatives. You know, we grew from $100 million to $1 billion in 7.5 years since I've been here. But it's come with a price. It's come with us tackling 25 to 30 projects at any one time as a bank. That is the most difficult part of my day is what's my priority on these 25 to 30 projects, and can I get the team focused on execution?
Right.
The rest of my days, the rest of my daytime is fantastic. And, you know, I always grew up saying if I hit my snooze alarm more than twice, I need to leave my current job. I can tell you in my 40 years, I've never hit my snooze alarm more than twice.
Wow.
So I would say, you know, come in, surround yourself with great people, smile a lot, don't complain, and make your boss look good.
I'll try. All right, last question. Big bank or small bank, and why?
Small bank grow into a big bank. I never want to be that big bank that you have to call a 1-800 number. But at the same time, Sterling, I want to take our bank from $1 billion to $5 billion and beyond. But I want to do it with high touch hand holding, and I want to look and feel and smell like a small community bank, but I want to be big in assets, and I want to be profitable and powerful.
Awesome. Well, Tom, that was all I had for you today. Thank you so much for sitting down with us, taking your time, inviting us out to your lovely tiki hut here in St. Pete Beach. As you said, SBA has been good to you. You've been good to me. And I look forward to a lot more continued success.
Great. Well, here's for a lot of years ahead. And congratulations on everything you've done, Sterling.
Thank you.
You are truly a remarkable lender in this space nationally. And so glad I get to work with you.
You just watched an episode of Sterling SBA. Make sure you like, subscribe, and click the notification button. Thanks for watching.